Good afternoon and welcome to BizTech's Asian Midday Market Watch. I'm Jeffery Halley and today my co-host is Brian Fernandez. It's the 29th of January. That month has gone very quickly and our guest today is Vishnu Varathan who is the Head of Economics and Strategy at Mizuho Bank in Singapore. Welcome Vishnu as ever.
Thanks Jeff. Thanks Brian. Good to be with you gentlemen on a Monday and it's a great way to start the week as well.
Very flattering. We'll just have a look at Asian markets first. So I'll pass you over to Brian there for a quick roundup of stock markets around the region.
Now, so we start with the KLCI. That's up 0.43%. Shanghai is up 0.15%. The ASX All Ordinaries is up 0.28%. The Nikkei is up 0.89%. The Hang Seng is up 0.96%. Rounding up the numbers, we've got the Kospi, which is up 1.38%. Vishnu, that's a sea of green across the region. Tell us why.
Well, it does appear, we've got a few moving parts here, and no one's entirely sure any of this will endure. One, of course, is, heading into this week, there's some hopes that it's more likely than not that the Fed will signal that they could cut as early as March. And then there's been the move by Beijing to really curb the ability to short sell on the market. So, how much of this is a technical squeeze and how much of it is an enduring, optimism, that I think is a question that is left unanswered. If anything, I think it errs on the side of not making too much of the initial rebound. You also have got, more data points coming out this week. Down under in Australia, you've got retail sales, inflation, so on and so forth. But essentially, a lot of the narrative still appears to be biased towards soft landing hopes and skimming off what could be a bumpy recovery.
Vishnu, it's actually quite surprising to see the markets a sea of green today, given the geopolitical developments that we're seeing around the world over the weekend and this morning. Let's start with the first one that's on everyone's lips, and that's Evergrande. The Hong Kong courts have ordered a liquidation after a 2-year saga of negotiations with creditors. Evergrande shares plunged 21% before the courts before the liquidation decision came out this morning. I guess from you, I'd be interested to hear your thoughts on the liquidation itself, because mainland compliance with liquidation orders on behalf of the creditors is a bit of a grey area. We really haven't been in this position before at this scale, and I'm perhaps slightly concerned that if the mainland authorities don't comply with Hong Kong liquidation orders, this may have an implication, a negative implication for mainland companies that have their stocks listed in Hong Kong, and potentially those that are thinking of IPOing in the future if they have most of their assets and businesses on the mainland.
No, that's really a good point that you brought up, Jeff, and I'm and it's obvious to see why I couldn't include that in the list of positives that's giving rise to the green. So I'm glad you brought it up, and I'm also happy that you framed it, perfectly, saying it's going to impact any of the listings in the context of onshore versus offshore assets, because that becomes quite relevant now. So putting aside those two very key points, the issue with Evergrande would be, whether we are all on the same page in terms of what needs to be liquidated, because obviously since the start of that trial to where we are now, one might argue that what's left on Evergrande's balance sheet looks quite different. Quite a few assets have been stripped out, they have been doled out, and the motivations are also different. I think whereas the Hong Kong court ruling wants to abide by going down the priority list for creditors, for owners, so on and so forth, in terms of realizing value. Onshore, a lot of the priority might be in terms of delivering the projects that need to be delivered to those who have bought the properties, rather than going down this list imminently. So they would there's an interest to keeping it as a going concern, and some might argue a zombie going concern, but nevertheless, there's a conflict of interest. So we are where we are, which is at a point where there's still more questions than answers. A verdict does not a resolution make, I suppose, in this case. And I think we will have to watch that space quite closely.
And Vishnu, I think you're right. We need to have a more in-depth discussion also around this, because that has broader implications of money flows from an asset allocation perspective away from China because of the ambiguity, and then perhaps again further money flows, accelerated money flows into alternative Asian economies, Japan being the prime beneficiary of this.
I mean, really, the conundrum and the conflict here is easy to understate it. And on one hand, I mean, as we look at this, and as Jeff rightly pointed out, it does cast a shadow in terms of what may be realized in an event of a liquidation, so on and so forth. There's also another angle on this where, investors are almost relieved that they can bring this to a conclusion rather than it drawing out, in perpetuity and having whatever little realizable value just stuck on the balance sheet and perhaps in some cases just eroding away. Of course, Evergrande is a pretty extreme case. But so we need to weigh off two things. One is whether or not the onshore execution of any will is close enough to the intended purpose. That's the first one, which Jeff rightly pointed out. The other is, would there be a speedy resolution? And on that, I suppose, one could argue there's a little bit of a silver lining, although there's grasping straws. But essentially what this means is that no matter how we look at it, I think investors are now painfully aware, and they've smelled the coffee on needing to price risk premium appropriately for any issuances where the home base of a company is in China, because it's then subject to the whims and the wills of the policy campaign of the moment.
Right.
Well,
now, let's
on a different note, then closer to home. Vishnu, policy unchanged in its first meeting. What are your thoughts on that?
I think that's been marked by a conspicuous lack of surprise, entirely expected. But what's worth reading here is it's not that kind of a complacent and comfortable policy hold. It's a policy hold marked by obvious tensions in terms of the two-way risks, both for inflation and growth. The MAS's baseline is just their baseline is disinflation will continue, and whilst there's uncertainty is heightened due to geopolitics and all your other factors, they still expect a bumpy recovery in growth more markedly in the second half, led by manufacturing and electronics turnaround. So they are very, very cautiously optimistic that 2024 will pan out slightly better. And really the hold at this moment is just saying, risks can go both ways, and it's premature to move on anything, particularly given in Singapore's case, there's quite a bit of stickiness around price pressures for the time being.
And looking at oil prices today, Vishnu, they are slightly higher in Asia, and that comes after the events in the weekend where some US troops were killed by a drone strike in northeast Jordan. I'm quite surprised about oil prices. I mean, there seems to be an increasing threat of escalation here, yet the markets themselves seem to be quite reticent about pricing that risk in. Do you have any thoughts on oil prices here this morning?
No, you hit the nail on the head, Jeff. So my surprise is the same as yours, which is it's not that they've moved up, it's just that they've not moved up enough. But I think we can put it down to just three factors. The first factor is markets are increasingly desensitized. So unless the threat of escalation is proximate enough, they're happy to hold off. The second one is going to be a bit controversial, but I'm going to say in a US elections year, markets are also acutely aware that the US does not like high oil prices in a presidential election year. So they think, the US may have levers to pull to ensure that it's kept low enough. And the last factor I'm going to put it down to is there's also an aspect of a demand buckle here, not completely unrelated to China. And so there are obvious tensions in oil prices, and I think they're just waiting for a more tangible trigger to come through. But for now, I am totally with you. The geopolitics suggests that the downside may not come so quickly, whereas the risks are skewed to the upside, and that fat tail can eventuate quite abruptly.
Right. Thanks for your insights today, Vishnu. It's always a pleasure having you on the program. We've been speaking to Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank here in Singapore. And this has been BizTech's Asian Midday Market Watch. I'm Jeffery Halley.
And I'm Brian Fernandez.
And this video and podcast will be on our website, www.biztech.asia, our social media platforms, as well as our syndication partners, TV stations, radio stations, and websites. Thanks so much for tuning in.